check on regional markets, and Asian shares are mixed as investors take a pause from the Federal Reserve's decision to keep its stimulus intact, which sparked a global rally. Japan's Nikkei share average is up for a third straight session after the dollar's rise to above the 99 yen level. Meantime, down under, Australian shares are slipping from five-year highs following Wall Street's retreat overnight. However, a rise in metals prices is helping to lift mining counters. And just a reminder, financial markets in China, Hong Kong, Taiwan and South Korea are closed today for public holidays. Trade in those markets resumes on Monday. To talk more with us about stocks is William Wiranto of Barclays Wealth. He joins us from our city studio at OCBC. Good morning to you. Now, one of the oldest cliches on Wall Street is that financial markets hate uncertainty and confusion. Has the Fed created that following its decision not to cut stimulus?
In some ways, they have indeed. I think overall, market has been looking for some tapering. The question only is by how much. Because we found out 2 days ago now that Fed delivered a big Fed zero, and that's going to add a bit of uncertainty to market. But on the bright side of things, to be fair, at least they surprised on the dovish side by not doing anything drastically hawkish.
Well, we've seen Wall Street slip back a little bit overnight, but will the celebration in global equity markets be brief as the Fed's no tapering points to disappointment in third quarter corporate profits report surely?
I think the disappointment wouldn't come so much because expectations haven't been all that lofty, especially on the U.S. equities front. Overall, however, I think to stretch investors again over the longer term, especially at this juncture, we do much prefer equities to other alternatives such as especially fixed income. Even though the Fed has dissuaded itself from tapering, it's really a matter of when, no longer a matter of if. And when rates do rise, and they eventually do rise, bonds will suffer quite a bit more.
Is the U.S. economy so fragile that it can't sustain itself without life support?
Not really. I think to follow the medical analogy, we see the Fed is prescribing more antibiotics. It's never really clear how much antibiotics the U.S. economy, which is patient here, really needs. I think, but the Bernanke, being the doctor, the cautious doctor that he is, has chosen to prescribe more just to be extra sure.
Okay, so will the next Fed policy meeting scheduled for the end of October see a tapering announcement?
It's unlikely. I mean, look, they have clearly been not seen enough certainty in the U.S. economy recovery to taper 2 days ago. I think just a few more data points wouldn't confirm anything for them. I think the closer they will come to tapering will be end of this year in December.
What about the fate of emerging markets in Asia? Have they been spared for now from capital outflows?
In some ways, yes, but look, I think it's really a matter of time before EM has to contend with slower liquidity growth globally. I think what the Fed has done is to buy time for some of the emerging markets. Now the questions for the policymakers around the region and elsewhere in the emerging markets is really how they best capitalize on this time window that the Fed has given them. Will they push through structural reforms, push growth beyond what's needed, and capture some of the emerging market flows again, or would they just sit on their hands and wait for the tapering to eventually happen?
Looking at Southeast Asia, what's your investment view on Indonesia?
We still like the economy, fundamentally speaking. I think over the long run, the fact that a 250 million people, consumers, and also labor market force, there's a force to be contend with. But in the near term, challenges remain. And the current account deficit continues to dog the economy. The policymakers have done the right things. We have Pak Agus, BI, and Pak Katib at the Department of Finance. They're both doing the right things. But I think those measures, including the rate hikes, etc., will take time to filter through. We just simply need more time.
Thailand and the Philippines were also hit by capital outflows in the past few months. Are you cautious on both markets?
I mean, the fact that those two economies have seen some outflows shouldn't come as a surprise, given that they're emerging markets after all. But I think between the two economies, we prefer Philippines. President Aquino seems to know what he's doing. I think the investment grade rating has also given the country a bit of a boost. And overall, so looking at the structural economy, the remittances flow that continue to come into the country bolster any concern about capital outflow from the risk-off environment globally.
Last question for you then. What about your outlook for Singapore and Malaysia?
The two economies, I would say the more export-oriented economies in the region, and I think they will benefit from a global trade cycle that we see coming in. Having said that, I think Singapore continues to have a structural issue, wage inflation issue, given what is done on curbing foreign employers, etc., employees rather, etc. And on Malaysia front, I think the dependence in commodities as a source of budget financing through Petronas, etc., will be a key issue to look out for. But I think the export orientation of the economies will help.
All right. Well, thank you very much indeed for that. William Wiranto of Barclays Wealth there. That's a business wrap from me for now. Back over to Steve and Suzanne.
All right, thanks a lot, Pat. Of course, things always pick up.